Hello and welcome to Sectors Up Close. I'm Angeline Ong. Our focus today is on Russia and our guest is Marcelo Cavallo, Head of Emerging Market Research at BNP Paribas. Now, there was a time that Russia had fallen out of favour with international investors due to long-standing problems with corruption and autocratic leadership and geopolitical tensions with the West. But not anymore. The MSCI Russia Index and the funds that track it are up 25% so far this year. They are outperforming the wider emerging market index, which has stayed unchanged mostly due to market turmoil in China. There are some fundamental reasons why the Russian market is attracting attention, including a dividend yield of 4.6% and forward PE ratio of only 6.8 as of the end of August. But the primary reason is exports, especially oil. Russia has benefited from a global commodities boom. Like its economy, much of this market is made up of oil and gas and metals producers. And while relations with the US remain strained, Russia's Vladimir Putin has clamped down on domestic opposition. His ruling United Russia is almost certain to hang on to its lopsided majority in parliamentary elections taking place on Sunday. So what is the outlook for this emerging market economy? Let's ask Marcelo Cavallo, Head of Emerging Market Research at BNP Paribas. Thank you so much for joining us, Marcelo. First of all, the economy is looking in a good shape at the moment. What is your outlook, given it struggled to recover from the 2014 crisis?
You know, Angie, I think the outlook for the Russian economy is actually quite positive. We do think that Russia has very strong fundamentals. If you look at the fiscal accounts, they're in good shape, not much of debt. If you look at the external accounts, they're very solid as well. The current account is actually in surplus at this point, in part supported by oil prices, it's true. The main challenge, however, we think right now is inflation.
So, Marcelo, what if commodities prices turn sour? What for the outlook of Russia then?
Of course, Russia is very exposed to oil prices, and therefore, if oil prices go down, it's a further challenge for Russia. Therefore, for the long term, it's important for Russia to diversify its economy, as it's doing already. However, near term, it looks very likely the commodity prices, including oil, remain well supported.
Now, there are also lots of other risks, another war in Ukraine, corruption, domestic opposition to Putin's continued presidency. Do any of these factors feature in your outlook?
Well, they do, of course. We have to consider them all. However, we think the dominant factor here is the strength of the fundamental picture, which is still quite supportive. There is, of course, the challenge, as always, of geopolitics. We don't think, however, in terms of sanctions, they are likely in the near term. It looks like the US is turning right now to issues like Afghanistan and down the road more towards China as the main source of its focus. Domestically, however, there are issues, I'd say, from the macro point of view. The key one is still inflation, forcing, therefore, the central bank to hike rates.
How about climate change, Marcelo? This has featured a lot in all the discussions we've had with CEOs and also global leaders. How is it going to impact on the Russian economy given its focus on commodities?
Look, climate change, Angie, is here to stay for any country in the world. I do think, however, it's more of a multi-year theme rather than something that immediately impacts dramatically the very short term. So for the very short term, upcoming months at least, if not quarters, the broader story of supportive commodity prices, including oil, and robust growth, I think is the dominant factor from the investor's point of view.
And thank you very much. We have to leave it there. Thank you, Marcelo Cavallo, Head of Emerging Markets Research at BNP Paribas. Now, before I go, here are some of the top stories in this space. Russian President Vladimir Putin says he will have to spend a few days in self-isolation after dozens in his entourage fell ill with COVID-19. He was speaking via video link at a summit of a Russia-led security bloc that he had planned to attend in Tajikistan. The Kremlin says the rapid startup of the Nord Stream 2 pipeline to Germany could help calm record-high gas prices in Europe. Russia announced last week it had completed construction of the $11 billion pipeline that transits the Baltic Sea. But the start of gas flows requires the approval of Germany's regulator, which may take up to 4 months. Gas prices in Europe are at a record high. pushing up electricity costs as Europe heads into the winter season. And finally, allies of jailed Kremlin critic Alexei Navalny have urged Russians to vote for the Communist Party at parliamentary elections this week, part of a tactical voting campaign meant to hurt the ruling United Russia Party. Navalny's smart voting campaign is designed to consolidate the votes of those who oppose United Russia, which currently holds 3/4 of the seats in the lower house of parliament and dominates Russian political life. And that is your look at investing in Russia. I am Angeline Ong, and this is Reuters.